Hey everyone, it's Iggy from the Invest in Iguana, and today we're diving into a truly historic week for Wall Street and corporate America. If you keep an eye on markets, you probably felt the tremors from over 128 billion in mega deals shaking up industries from video games to pharmaceuticals, all in the last week of September 2025. Why does this matter? Because these weren't just about money changing hands. They completely rewrote the rules for US business and signaled new global shifts you need to watch. And if you're wondering, who's the guy in this lizard shirt? I'm ranked 8th in Tiger Brokers 2024 Influential Tigers. We've broken 1 million reads, 58,000 likes, over 1,000 videos, and more than 600,000 watch hours. US stocks, Asian trends, and big picture economics. That's what I live and breathe. Today's script is adapted straight from my latest in-depth Substack deep dive. So if you want to see all visuals and tables, grab the full article. The link's in the description. Here's what's coming up. A record-breaking gaming buyout by Saudi Arabia that puts U.S. cultural exports in new hands. Tesla's oddball quarter straight from the EV front lines. A pharmaceutical shakeup where policy and profits collide. U.S. leadership transitions in tech. Warren Buffett's final big chess move. Disruption in the credit scoring industry. Nike's regional comeback story. And the Meta AI ad revolution that's going to touch 1 billion users. Let's kick off with the blockbuster. Electronic Arts just got snapped up for $55 billion in the biggest leveraged buyout ever. Orchestrated by Saudi Arabia's Public Investment Fund, alongside US private equity. Now don't just glaze over that number. Imagine if the FIFA, Sims, and Battlefield franchises you or your kids play suddenly become part of Saudi economic strategy. That's what's happening. Saudi Arabia already owned 10% of EA, but this deal cements them at the heart of U.S. creative industries as part of their Vision 2030. Deals like this aren't just financial, they're political. Forbes calls it the largest private buyout ever, and with JP Morgan alone providing the debt, we're seeing mega banks still chasing scale. Regulators are expected to wave it through easily, partly thanks to the U.S.'s favorable rapport with Saudi Arabia. The international playbook now means U.S. icon brands can be controlled by global sovereign funds. What happens in U.S. boardrooms now starts in Riyadh just as often as New York. Now, swing over to Tesla. They delivered a record-setting 497,099 vehicles, blowing past the street's expectations. But, get this, shares still fell over 5% because the story beneath the headlines was more complicated. That big surge in sales? Driven by the end of a $7,500 federal tax credit, so buyers rushed to get cars before the credit vanished on September 30th. That's a classic case of policy driving market beats. Meanwhile, sales in Europe slid over 22% year on year, and Chinese EV competition is heating up. For investors, the lesson is policy changes can whipsaw even the biggest winners. But here's a bright spot. Tesla's energy storage arm quietly deployed 12.5 GWh, a record. They're not just a car company anymore. It proves why following the pivots behind the profit numbers is what gives you the real edge. On to pharma. This week, we saw the Trump RX initiative push Pfizer to a huge U.S. policy deal. Pfizer slashed direct-to-consumer drug prices by up to 85% and committed $70 billion to domestic manufacturing and research. They get tariff protection in return, and Wall Street cheered, driving Pfizer shares up a quick 6.8%. The kicker? New drugs come in at best-in-class, most favored nations, pricing for all payers. Commercial, Medicare, Medicaid. That fact alone could totally wreck the old model where U.S. consumers subsidized everyone else's cheap drugs. Why did this work? Political pressure, accept lower margins or face regulatory pain. And the ripple effect here? Other pharma majors are already scrambling to realign before similar deals get forced on them. Midway checkpoint, want all the checklists, full tables, and playbook from this video? The original Substack post has every screenshot. The link is right below. Let's talk boardrooms and big-name turnover. Spotify's Daniel Ek steps up to executive chairman after nearly 20 years, with co-presidents now running things as co-CEOs. Oracle did the same with two heads for different sides of its tech empire. This trend isn't just a fad, it's a reflection of how complex tech companies are getting, especially with AI threading through every business unit. The era of one person holding all reins is fading. Running parallel, Berkshire Hathaway made headlines with Warren Buffett's $9.7 billion buyout of Occidental Petroleum's OxyChem division, likely his final big deal as CEO. It's classic Buffett, buying a business that produces essential chemicals for water treatment and healthcare, things no competitor can easily copy. Here's the inside story. The press release featured Greg Abel, not Buffett, as the face of the deal. Get ready. The legendary investor is handing over the keys at the end of the year, and Berkshire looks well positioned for the handoff. Now let's hit the credit world. Fair Isaac, FICO, just turned the credit marketing world on its head. They're letting mortgage lenders buy FICO scores directly. No more huge markups from Equifax, Experian, or TransUnion. Lenders can pay a flat $10 per score or a two-part model that could cut average costs in half. This one tweak sent FICO stock soaring 18% and smacked the bureaus down as much as 12%. The Federal Housing Finance Agency pressured FICO with competition, authorizing home lenders to use VantageScore for the first time ever. What's the lesson here? Even the most established gatekeepers can be disrupted almost overnight when regulators and market movers align. Swinging to the consumer world, Nike's latest quarter is a masterclass in strategic adaptation. While the company's global revenue dipped 9%, North American sales are up 4%, hitting $11.7 billion for the quarter, beating estimates by over 6%. Nike is running down old inventory to make room for new styles, sacrificing margin now for long-term growth. Their CEO's strategy? Win now in key sports categories and geos, not trying to please every region at once. That's a global company thinking locally to stay competitive, and for investors, a reminder that region-focused execution still trumps one-size-fits-all plans. Next, we've got Meta Platforms and the biggest privacy policy update in years. Starting December 16, conversations with Meta AI will directly impact the ads and content you see across Facebook, Instagram, and WhatsApp. That's over 1 billion users, except Europe, the UK, and South Korea, who are fenced off by regulations. This change flips AI chatbots from cost centers into major ad revenue streams. If you're chatting with Meta AI about hiking, expect to see hiking boots and group invites soon after. For global investors, this showcases regulatory arbitrage, different rules, different markets, and enormous implications for data monetization and business models worldwide. Here's my honest take as an international investor and founder. This past week proves that no sector is immune to disruption or bold reinvention, even iconic American firms with global reach. U.S. companies are being buffeted by sovereign funds, political deals, AI breakthroughs, and regulatory change, sometimes all at once. The right framework isn't just buy and hold or trade the news, but to dig deep into where the real power is shifting. Whether that's executive benches, boardroom policy, or a new alliance between government and industry, these are the waters real long-term wealth is built in. Let's recap. Wall Street and Fortune 500 giants are redrawing the rules at lightning pace. Sometimes it's politics, sometimes it's AI, sometimes it's global capital calling the shots. And whether you're based in the US or tuned in from halfway around the world, these stories will settle into your watch list and portfolio. So stay curious, stay nimble, and be ready to act before trends show up in the next earnings call. If you found this breakdown valuable, join the Investing Iguana community for more unfiltered deep dives, early access resources, and a global network of savvy investors. The community's open, and I'd love to hear your biggest takeaway below. And if you want to keep your edge on the US market, check out my next video on US innovation stocks and tactical ETF strategies. Hit subscribe, and let's build our edge together.